From GenWealth Financial Advisors, it's the fastest 4 minutes in investing.
I'm Scott Inman. Tim Key with me for the fastest 4 this week. And on the radio side, on the other side of the next commercial break, we will be talking with Ryan Dietrich, the Chief Market Strategist for LPL Financial. So we don't want to steal any of Ryan's thunder. He's going to be talking about Outlook 2021. We've got our webinar coming up. He's going to be on that. And it's going to be talking about what it says, the outlook on the markets, the economy, the expectations for 2021. So we want to use this segment and this time, Tim, to kind of talk a little bit of a broader sense, a more general sense. Let's pull it back from 2021 because I think it's really easy for our clients, for any investor to get caught up in the short-term happenings in the market, the volatility, what's going to happen soon. But really, it's always good to point out that in the GenWealth Ready to Retire process, it's all about the bigger picture.
It is the bigger picture. And I think a lot of times we're used to just looking at our statements, seeing the balance, seeing it go up, see it go down. So we are very short-term minded on a lot of those types of things. But really, if you're within 10 years of retirement, we should be looking at your investments in a whole different way. We really should be looking at it more holistically. What will it do in different types of investments over the next 5, 10, 15 years?
Yeah, so when you look at your investments, think more longer term. And if you're younger and a long ways out, let's say 20 years from retirement, the volatility of 2021 should be of no concern. In fact, it should be an encouragement.
Absolutely. When we dollar cost average, which is what you're doing when you're actually having those contributions come out of your check every week or every 2 weeks and being reinvested into mutual funds, I mean, you're buying when it goes down, you're buying it when it's on sale. When it goes up, you're buying fewer shares, but that's a real good thing over the long term for us.
Yeah, so as Tim was talking about, you get about 10 years or less in, we call that the retirement red zone. That's when we start to implement the Ready to Retire process in terms of the bucketing strategy. And when you think about that in the income for life model, a lot of people think of, you mentioned the statements, all of their money in a pie. In a round circle, maybe it's divided into slices, but it's one big circle. I think when you get into retirement and go through the Ready to Retire process, our clients see it differently. It's in time-segmented buckets appropriated for certain time frames of your retirement. You want to be very conservative with the money you're going to be spending right away in retirement, but there does still need to be a growth component to it.
Absolutely. We know that if we're going into retirement at the age of 65, which a lot of people do, we're probably going to have at least 20, 25 years that we want to plan for. So we definitely need to have a growth component to that retirement plan. So being able to invest in growth mutual funds for the long term. And those are the accounts that if we do have a 30% pullback in the market like we did in March of last year, we'll see that balance take a hit. But again, it's come completely back, and we're actually on the plus side of that now. And so we do have time for the investments to do what they have done over the long term.
All right, so let's apply this just a little bit. In the outlook of 2021, no matter what happens in the next year or so, if you've gone through the Ready to Retire process and you're in that investment strategy, that first bucket, if 2021 turns out to be not a good year, is pretty much the same, right? Because of the investment strategy being very conservative. If equities do have a really good year, it's probably not going to be spectacular either because it's not built to really take off either. But you know that your monthly income that's coming to you on a regular basis is more stable than the market.
Those first buckets are really set to protect the principal balance. Make sure that we have that income there for your first years of retirement.
Yeah, and then the Ready to Retire process still has the growth buckets on the outside, so those would be affected one way or the other in Outlook 2021, but you know that you have time. Again, you're still the younger investor, if you will, for those outer buckets because you have 15 or 20 years left until you're going to need to use those assets. If you would like to learn more about the Ready to Retire process, you can always reach out to us here at GenWealth, 501-653-7355. That's it for the fastest 4 minutes in investing. The Get Ready for the Future show continues next.